Well, everybody, in real estate, there's one thing on our minds, and kind of one thing only, is when are those friggin' interest rates going to come down? It's unbelievable because in a normal environment, whatever the hell normal is, meaning when we didn't just come out of a pandemic, printing absorbent amounts of money, having crazy amount of debt, tariff renegotiation, trying to push through a bill, new administration, all new leaders, obviously trying to realign everything. And really at the end of the day is trying to get our house in order, doging things, right? Is that with volatility like this, most of the time we get some rate relief. But that 10-year treasury has been stubborn. I mean, stubborn is an understatement. It just hasn't moved. It's almost like the water temperature here in San Diego this last winter. It got to 55 and it just seemed to stay like that for 5 months, which is weird. Didn't move off of it. So it's just freezing the whole time. And so we feel frozen, we feel stuck. And there's so many things we could talk about from when we go back to 2022, when interest rates started rising. Jerome Powell, literally to quote him, said that basically the Fed's fund rate should go in line with where the PC inflation rate is. Well, that is out the window, folks. So we know that the Feds right now currently that are in here, Jerome Powell and his colleagues, they're not focused on inflation anymore. They're seeing it, but that is not the driver of why they'll cut rates. Their consumer spending, that has not blown up. The debt is not bothering them. The $9.2 trillion that they have to refinance this year, not bother. The housing market, they don't care about. The commercial market, they don't seem to care about. The small business owner that's getting crushed, they don't care about. The student loans, the car debt, all that stuff, they don't care about. The credit card where you're paying 21%, they don't care about. So what in the world do they care about? Because why aren't they cut? Like, if you're an average person, you're like, it seems like there's pain. It seems like things are not great. Like maybe you have a job, but for a look around, it seems like, right, people are hurting. And so the one thing that they seem to be focused on and talk about over and over again is this labor market, because the labor market has not broken, meaning that 4.2% unemployment rate is actually really good. There's 158, 57 so million people employed. That's a lot of people employed. So that means you have a job, you can pay your bills, even though you're probably struggling. And that's really what they're focused on right now. If the labor market were to break, that could change things. Obviously, they're a little bit nervous about inflation coming back around and creeping back up because of the tariffs and things like that. No signs have that shown this. We are now in June 1st here as I shoot this video. And this is not really happening. Nothing is really changing here. So with that being said, what could move the markets? And that's what I want to talk about in this video. As you saw the title, The Hook, to get your attention, you might be hearing this term out there, Trump talking about it, administration talking about it, other people talking about. It's called a shadow Fed official, and let me explain and let me break it down. Number one, Jerome Powell is the main Fed chairman. He is in charge. His term is set to be up in May of 2026. Obviously, there are things about Trump's going to fire him, get rid of him, or he's going to quit. It doesn't seem like any of that's going to happen. Actually, just this last week, he went and visited Trump in the White House. They never do that to probably talk. I'm sure Trump just wanted to be with him, give him a little nudge, say, is there any way you can get those rates down? Make sure you're not being political and not keeping rates up. Obviously, Trump doesn't agree with a lot of people what he's doing. There's a lot of people that do agree with what he's doing. It's almost a 50-50 where he should cut, where he should not cut. And honestly, if he's not cutting because he feels like the data is not there. But keep in mind, there's one thing that we really know about the Fed. They're always late to the party. They're okay with being late to cut. They're okay with being late to raise rates. We obviously know they should have started raising rates earlier. If you're in real estate, you might be like, Kenny, that's ridiculous. I got to lock in all these low rates. And I'm like, yes, it's great. But now you see, this is on the other side of it. This is what we deal with. It's like when things go up, they come down. When rates go down, they come up. So as I said, easy and steady always seems to win the race. And that's the way we like it with the housing market and rates. Like we don't want them to just plummet down real quickly because that just causes more issues than you might know at sitting home. Like, wow, rates drop is a good thing, but not the back end of the industry. It's just painful. So what exactly is a shadow Fed? How could this change rates? And why do we think this is going to happen moving forward? Well, number one, a shadow Fed would be somebody over here that when something happens in the market, they're talking, they're giving their opinion. They're saying, well, if I was a Fed official, I would do this and I would do that. And honestly, if it's just a person, and they're not going to maybe be reelected for the position of Fed, or they're part of the Fed, or there's some big mainstream person, they might not move the markets at all. The markets not really care at all, right? What we're going to be coming up here in the third, fourth quarter of this year is we will probably get an announcement who the new Fed official is, Trump administration is going to pick. And obviously when they pick this person, my guess is they're going to be, probably conservative, things like that, but they're going to be more in line with getting these friggin' interest rates down, right? Because they need to get the interest rates down quickly because there's lots of things they need to do. And let's just run through a couple things why it's important. Number one, $9.2 trillion they need to refinance this year, and they might not even get to that, so we might just be stuck at higher rates. Number two, the housing market. Number three, the commercial market. Number four, all the consumer debt we talked about, the houses, the credit cards, right? Small businesses, all these things, folks, it's killing us. There's also another business outside of normal businesses that rely on rates, and those businesses have been getting crushed, which is not helping them. So lower rates can be a good thing. They also can be a bad thing, but we're not, when we say lower rates, we're talking about the housing market. We're talking about a no closing cost, no point, like kind of rate in the 5, right? And right now we're in the 6s. So getting those interest rates down a point and a half, that's where we're looking. We're not asking, or we're not thinking rates are going to come down in the 2 and 3% anytime soon, or will they ever will? You never know in this crazy world we live in. Things can happen, or rates should have to slide back down. But with that being said, how could the shadow Fed work, and what do we think could happen? This is kind of my opinion. Trump elects somebody, announces that this person is going to be coming in and taking over Powell's position in May. Obviously, just like everybody on Trump's administration, they're always in front of the camera, always transparent, always talking, always giving interviews, always giving updates, which is really helpful. It's good and bad because sometimes it's too much, and sometimes obviously it might be the bad is sometimes too much, and the good is, hey, we know where they stand, whether you like it or not. At least you know they're not hiding, and they're not telling us anything. So what I think we're going to see with the shadow Fed official coming in is you're going to get somebody third, fourth quarter to come in. They're going to start being interviewed. They're going to start telling what they're going to do. They're going to start saying when this happens in the market, this report comes out, and the PC report or the unemployment report or the data comes out, the feds will come out and respond, or Jerome Powell, but this person will come out and say, well, this is, if I was a Fed official, or when I become it, I'd be doing this and I'd be doing that, and this is why. And so here is the big thing about all this. The bond and treasury market actually looks forward. So the Fed is actually backward looking, right? The data they have is old and it's backwards. And that's why a lot of us in the industry, it's like, if you're looking at real-time data right now, we know there's more pain. We know that inflation is lower. Even the Feds know this, that's just their model. So kind of to wrap up this video, and this is the main points you want to focus on. New Fed official is going to be announced. It's going to come in. When you hear every month, every week, when you hear this economic data, that economic data, I'm guessing this person's going to come out and start saying, I would do this, I would do that. Well, if this person at that point in time is going to be coming into that office and the Fed official in 6 to 8 months, obviously it's a different job. Obviously they're influenced by their Fed officials. They have 400 economists behind them. They've got politicians. They're going to get grilled. The House, the Senate, trust me, they're going to get hammered. But regardless, this person can give their view of what they're going to think. So if the bond market's always looking ahead at what they think is going to happen in 6 months, if this person's saying is, I'm going to cut more, I don't believe in the Powell stance, we think he's being political, blah, 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 and they're signaling what they're going to do, that could, in the interim, help the 10-year treasury, which would help lower rates across the board. Residential, commercial. And one of the things we do here is obviously talk about housing, and you might be looking to buy a house, refinance a house, buy an investment property, refinance, 1 property, 10 properties, whatever it is, and you're a client watching this of mine. It's like, these are one of the straws that they could be using to pull on the lever and to help bring down rates. So it's not always about the data. There's other things going on outside the data that can manipulate and bring down rates. And when I say manipulate, that's because a Fed official right now could come out and say, oh, whoops, we're late, we screwed up. And we're like, wait a minute. So we've been paying high rates for 6 months because you manipulated the market, because you were wrong. So guys, it reverses. So if somebody comes out and says, I'm going to do this, and they're wrong and rates go down, it's okay. But if they're wrong, they could go back up. Just like Jerome Powell, right? Last year, he just admitted, I was late. They're okay with being late. But that means you could have paid a higher rate because he was late. When the jobs report comes out, and last year we realized in 2023 they overstated jobs by 1 million. When you went to go lock that home loan and a false jobs report came out, because that's what it was, a bunch of BS, and that rate went up 1/4 point, that was manipulation, not in the part for you to win. So there's manipulation all over, right? What people say is all over. If Warren Buffett comes out tomorrow and says that he thinks the global economy is going to go into a depression, the stock market would probably fall off a cliff because he has that much influence. So people have influence, and then the Fed has obviously massive influence. So if a new Fed official is going to come in and start talking about what they're going to do in the future, what they would do now, the bond market would snip that out. Will a 10-year treasury and other treasuries come down? I don't know. It's just a thought. Let me know. Love to hear back from you. Anyways, always, thanks for watching. If I could help you out, please reach out anytime. Talk to you guys soon.